All right, here we go. So, my name is Thomas, and I would like to welcome everyone to our weekly trading seminar talking about markets. So, let's begin this trading week with our brief market overview. As I said, my name is Thomas, and I will be happy to conduct the following trading session for you. So, am I audible? Yes, I think I'm audible. I think my screen is visible, so everything should be fine. Right. So, my dear friends, fellow traders, the best way to conduct this webinar would be if you ask me questions about, trading ideas, what's going on with the markets, updates, and so on and so forth. So, let's start by looking at some assets first, and then I will switch to talking about other aspects of what's going on and other interesting trading ideas that we might see today and this week. Right. Hello, Mr. Lachman, I think, or Laxman from India. Namaste. Nice to meet you in our trading session. So first and foremost, let's talk about, right, wait a second. Let me just reload the trading platform so that everything runs smoothly and quickly. And so here we are. Come on. The trading platform loads. And yes, so first of all, let's talk about the asset of this week. Last Monday, roughly 1 week ago, we were looking at Bitcoin price while it was trading at, near 63,000, more or less, a little bit, maybe a little over, maybe a little under, but nonetheless, it was trading right in this area, in this zone. And today we are trading back at the very exact numbers, which is well, it happens, right? Because opening price and closing price, if you look at certain situations, like for example, if you open the trade on the 16th of April and then on the 26th, 10 days later, the price was pretty much trading at the same price. Also, the same quotes, you would see the same quotes, and you would see 0% price change or PNL if you trade Forex. Right. So then we saw something very dramatic that happened last week. I think was especially on Monday. Yeah, so on Monday we saw this pretty deadly drop. So when Bitcoin dropped below 60,000, I think it was on Friday, right? Something like this on Friday, and then Saturday followed. So this was a very dramatic move, and many short sell positions were liquidated. It's the opposite. Many long positions were, or buy positions were liquidated, and so many those who were forecasting Bitcoin to drop, and those who opened trades accordingly, those people profited tremendous amounts of money, and the same is true for those and the opposite is true for those who were holding positions with a stop loss slightly below 60,000, maybe at 59.5, maybe 55, 59, 58.5, etc. Well, it's not the first time that something like this happens. So there was this drop right under a very strong strategic level, and then what we saw in the coming days was a quick rebound. So we stayed below this price only for 2-3 days, and then on Friday, during the non-farm payrolls, the price surged, and right, so the price surged above $60,000 again, and the price has continued its upward climb. And right now, it's much better to see this with our traditional Heikin Ashi. So 1, 2, 3. So 3 days of growth and this pretty huge candlestick on Friday, so the Friday candlestick. Then Bitcoin continued rising on Saturday, and then Sunday we drew this doji candlestick. And now the very interesting question is what happens next, and it is very likely that growth will finally continue because Bitcoin just demonstrated that it is quite strong and it doesn't really feel like dropping. And it also confirmed that if we look at it on the weekly time frame, that this is a very classic traditional typical reversal pattern. When you see this when you see something like this on the weekly chart, we have this false breakout and then price reverses. And the same was true in March, in the middle of March, when we posted these all-time highs at 74,000. Wow, 74,000, which is $10,000 higher than the current price, or plus 15%, or roughly 15% from the current prices, plus probably like 12%. Yeah, something like 15%. Well, anyways, you can do the maths to be exact. And then there were 2 red weeks, then there was this green week, and then 1, 2, 3, so almost and then a few sideways weeks, like pretty much for a month. Bitcoin has been trading in this very, very narrow range. So from the 14th of April, and today is what? Today is the 6th of May. Almost 3.5 weeks have passed since then, since this moment of time. And yes, we continue trading in this narrow range, as you can see. Right, so let's do some drawing here, right? So we connect this, and I need another line. I need another trend line. Here it is. So as you can see, we are trading in this pretty big corridor, pretty big range, and so the price needs some strong news in order to break above this like either resistance level or the support level. So if price drops below, say, 55, then it might drop all the way to 50. But given how much interest Bitcoin now triggers, I don't think that will be the case, because it looks like whenever it drops, buy orders start pouring in and start to sort of buy everything that is available on the market. Right. Wow, good question from Vivek here. Which book is best if I'm a beginner in stock or share market, stock market? Well, pretty much trading world. Surprisingly, I would not be able to recommend any books so much on patterns, because now patterns have quite evolved, and it is better to collect information by watching various webinars, streams, etc. Just currently there is so much information. It is hard to believe how much information it is available right now. And sometimes I look back into my beginning as of my trading career, and I sometimes wish I had all this information, that this information had been available then, because that would have saved me so much time. But I mean, there were many books, but books are kind of like written, and they don't really teach you so much to understand the market. Like, they give you certain understanding of the market, but then you get way better understanding of the market by just simply looking at various charts and noticing patterns. And also the crucial moment is that, like, if you just look at the charts like this, right, you kind of learn and you notice certain patterns, but nothing beats looking at charts in real time and noticing how charts behave during certain phases, during certain news releases, during certain well, pretty much you start noticing certain behavioral patterns of charts, and that's the best way how one can learn about trading. And yeah, I mean, if you just look at charts like this, it's kind of all right, but when you look at how history unfolds right in front of our eyes, that is the best. That would be your best teacher. So the market is always your best teacher. But talking about books, I would definitely recommend some classic ones about some classic books on market psychology. For example, the first one is called The Disciplined Trader by Mark Douglas. I think that is his last name. And the second book I recommend is it's called Trading in the Zone. So, and this zone basically means your comfort zone. It's not about like being in the comfort zone, right? So we all heard so many stories that we need to break out of our comfort zone, and basically when we start trading markets, we eventually get out of our comfort zone. But this the zone for traders means this zone when you're 100% focused on what's going on in the market, nothing, everything else you leave behind. So when you are in front of your monitor or your like mobile device or any other trading device, so you are 100% concentrated. You don't just look at you just pretty much concentrated. At the same time, you feel relaxed. You have your certain game plan. You have your plan A, plan B, plan C. You have backup plans for various situations. That is called trading in the zone. So you need to be focused. You need to pretty much always sort of understand what you're doing. All right. So let's move on. I think I have some other questions today. So, sir, what is the trick of Heikin Ashi candlesticks and how to profitable with this candlestick? All right. What is the trick of Heikin? Okay, so it's the same question about Heikin Ashi candlesticks. So, the Heikin Ashi candlesticks. So, some people consider them as an independent indicator, and others consider them as a variation or another kind of Japanese candlestick. So it doesn't really matter, like because some people think it's a standalone indicator, others think that it is just another way of presenting chart information. So right, so this topic is quite it encompasses a lot of information and many various topics, but let me explain you in very brief in simple words. So Heikin Ashi usually provides you this kind of smooth way of looking at charts where for example, when it's pretty much when it's uptrend, usually most of Heikin Ashi candlesticks are green, and on the contrary, when we are in the downtrend situation, most of these Heikin Ashi candlesticks are of red color. So we have up, down wave, a little bit upwards, downwards, and the easiest thing to do would basically be all right, let's open up Bitcoin chart, so that will be quite interesting. Right, here it is. Okay. Reload platform just in case, so that I don't have any ping. Right, so Bitcoin. So when can one open trade? So you can open trades simply when the Heikin Ashi color is green. So you open up trades, and then you sort of try and catch these like trend waves, and then like when it's red, you open down trades. For example, here. So this is in fact an indicator which can pretty much substitute the whole strategy. So I mean, if you look at this at the Heikin Ashi candlesticks carefully, you would see that it provides you with so many various opportunities for opening trades and actually profiting. And when you think about forex, I would like to remind you that you don't need to have, say, 60% profitable trades or 70% profitable trades. All you need is to have somewhat around 35, maybe, so 30, 25, between 25 and 35% will basically generate profits for you if your risk to reward ratio is 1 to 3 or more or better. And if you look at for example, at this chart with the Heikin Ashi, so see here we open up trades here, the first one, the second one. So maybe after the second one, after the starting with the second Heikin Ashi candlestick, we start opening down trades, and boom, we managed to catch all this price move from 72.5 all the way down to 65 approximately. I mean, we never know when price reverses, when to exit. So you do partial exits, and for this purpose, you open multiple trades. So instead of opening a trade in the amount of $1,000, you instead open 4 trades in the amount of $250 each, and you close them at, like you said, different take profits. Right, then maybe you open up trades here, maybe you skip it, and then boom, the next downwards wave. Here, another one. So as you can see, I mean, you do some backwards testing. So obviously when Bitcoin isn't going somewhere, so during neutral phases, during sideways moves, yes, it won't give you enough of potential. For example, here, like 2 red candlesticks, 2 green, 1 blue. So you need to find some moment of time, some certain phase of the market when the market is moving, so the asset is moving. So let's have a look at another example, right? So gold, right? So gold, let me go to Forex gold. Okay, so gold, as you can see, once again, like you don't open here maybe on the red one, on the first red one, you wait for this next one to close. So for example, 1, 2, and then you open downwards. 1, 2 green ones, and then you open upwards. Okay, so you get kicked out of the position by stop loss, right? You don't lose much, and then you catch a little bit here. You probably close this trade with a break even, then another few break even trades, and then eventually you catch this, so another $40 of movement with gold. Now say 1, 2, all right, on the right with this in the beginning of this candlestick, somewhere around 2,310, you could open a trade and you would be making around $15 right now. And when was it? Like 2,400? Yes. So as you can see here a little bit, here a little bit. So this can be used as a standalone indicator, and also you can combine the Heikin Ashi candlesticks with other indicators. So just in my opinion, it doesn't really work well with like 1 minute time frame. I mean, not for forex. So 1 minute time frame, you can still use this indicator for FTT trades. I would say it's all right. FTT trades, one minute time frame. But if you want to trade forex, nothing less, not less than well, 15 minutes would be the minimum time frame. Possible. Not less than that. All right. So let's go to Ethereum. So yes, Ethereum, it is even more volatile than Bitcoin, right? So you can, even though it replicates almost all Bitcoin moves, but it does so with more amplitude, right? It grows faster, it drops faster. So given the maximum multiplier, right? So maximum multiplier is 20, 50. We have had this little updated multipliers. So now 5, 10, 20, 50. Let me double check with Bitcoin. No, it's still 5 and 10. But so yeah, like these market conditions, they might change. Let's go and check Litecoin. What's the maximum one? Okay, it's 5. So nonetheless, we have Ethereum, which is, as I said, it moves pretty fast and it moves faster than Bitcoin, and also its multiplier, its maximum multiplier equals 50 now. So you can actually open, like you can really trade more, maybe more aggressively. I would say that would be the right word, in fact, and you can like potentially make more profits, and well, that's always a good thing, right? Because it gives you more, it provides you with more opportunities. Alrighty, so what comes next? Do you use the trading bot? No, I don't use any trading bots. I have certain software that I have purchased, but it's used for analytics and not for opening trades. So I open all my trades actually manually. I used to have a few trading bots. I kind of like their performance, but I never considered them like very serious tools. But I mean, probably, I mean, since technologies are evolving, some part of my brain, like even when I dream, it basically tells me that I should start focusing more on algorithmic trading, which is pretty much about bot trading. So I think this day is not far away, not far from today, when I start trading, when I start opening more trades with the bot. So yes, I think that might happen quite soon. Right. Can you do some live trades? Well, I might open a few trades in the very end, but it's not really the main focus of today's webinar, because all other how many webinars we do per week, like 15 or 16 on all languages. Those other webinars are dedicated to live trading, so this trading on Monday is reserved to just this little talk show about what's going on with the markets and providing you with some recent market updates. Sir, what is the best financial market to trade and how I trade around the news? Wow. Well, so the best thing you can do is in this case, like how do you figure out what's the best for you? Well, you need to try various markets, because there is no there is no kind of one fits all solution. So each and every trader has to decide on their own which kind of strategy they want to use. Because I mean, I sometimes go to these trading conferences and I talk to different traders, and some people like trading forex, others like trading FTT style of trades. There are multiple ways how you can trade that, like FTT trades, mostly quick trades. Other traders are scalpers. Some other traders, they prefer the US stock markets, like the Nasdaq, the New York Stock Exchange. Other people prefer CME, the Chicago Mercantile Exchange. They prefer futures and options. Others only trade their local countries' main exchanges, and they trade stocks. So you need to try different things. But I mean, even talking about FTT trades, well, FTT trades, in my opinion, seems like one of the easiest, not just easiest things or assets, types of assets or trades to trade, but it's also about it gives you the best opportunity to actually experience many various situations, and by opening so many trades and putting yourself into so many different situations, you simply learn much at a much faster rate, because you experience more, you have more, you process more charts, you open more trades, and you get experience at a much faster rate. And then from FTT, you can move on to, for example, Forex. We have Forex available on our platform on OLYMP TRADE. Then we have stocks, which are long-term investments. The multiplier here is 1, so it's the smallest multiplier possible. What else? So yes, everyone pretty much finds some type of instrument which fits his or her trading style the best. So that is pretty much the best way to to find something that fits you and your trading style. So start with FTT, then gradually start opening trades on Forex, and then you can learn about how to trade options, how to trade, well, what else have we forgotten? Like stocks, American stocks, and just don't try to sort of rush it and learn how to do everything like in 1 week, in 2 weeks. So instead, just give yourself enough time to learn. So because basically you need a lot of time to learn, right? Especially if you are a newbie and you don't know how to trade, you don't have much experience. Just give yourself a realistic goal, because many people make a common mistake when they actually try and have this a little bit unrealistic dream of becoming a millionaire in like overnight or over 1 week. So it is just not realistic. But focus on learning charts little by little. Start learn a few indicators, learn a few trading strategies, practice more with small amounts of money, the smallest amounts of money possible. No one pushes you to trade with, say, $10 per trade, $50 per trade. No, that time will come. So, for example, from time to time, I use pretty big positions. So, for example, now even with the Euro USD, as you can see, I have pretty big sizes. So trading sizes, like, what is it, 4,000 here? So 4,000, like $12,000 in total. But you need probably to spend a few years before you can start to trade such amounts of money comfortably, because you need to stay in this, once again, in this trading zone. You need to do everything in a relaxed manner, comfortably, not trying to rush too fast. Can you show your trades and how did you execute them? Well, I have, during almost every Monday, I show my trades. You can find the recordings of these videos on YouTube. I will not obviously do it right now because it's gonna take a lot of time. But yes, I do a lot of open multiple live trades. So for example, now, yes, with Bitcoin, look, I opened this trade. When was that? That was yesterday. So when the price reached 64,000, I already felt that we were overbought with Bitcoin, and I expect a temporary drop towards 62,000, maybe even 61,000, maybe even 60. Who knows? So after this pretty strong growth, I opened this trade for a reversal. Okay, Nvidia. Okay, I was expecting it would continue dropping, but okay, so maybe today it will get closed by my stop loss. We'll see about that. Euro USD. Yes, Euro USD is a great trade because there was this drop from 1.10 all the way to 1.06, and from 1.06 we started slowly to rebound, and that's when I opened this upwards trade. Ethereum. Okay, so Ethereum, I opened this trade like in January 26th, and I was expecting that price will reach 5,000. So my target was 5,000. We haven't gotten there yet, but this position is in profits, is in the money, as they say with the market lingo, and I still feel very comfortable holding this position, so I will keep holding it for some indefinite period of time. The same is with gold. I opened this trade long time ago, a few months back, like in January, and my target is 2,500, 2,600. So I have, as I said before, I follow this principle of multiple trades. So I break my trade into smaller trades, the investment money, and here, as you can see, it's 3 trades of $2,000 each, and I keep holding them. And Cardano. So I was expecting it. Where was I expecting it? I was expecting it would go all the way to at least $1 or probably even higher, because it has a lot of upside potential. If you look at some historic charts, it was trading more than $2, $3, $4. So I was expecting a nice rise towards there, and so so these are my current positions with in this account. I also, as I said, have multiple accounts. But that's another story. So, Nvidia closed with a loss, but well, it opened with a gap up because cryptocurrencies are surging, and it seems as though the demand for chips and video cards is there to stay with us. So we can rely that we can pretty much continue thinking that betting that Nvidia will rise, and other companies which are associated with cryptocurrencies will continue rising as well. All right, so I guess this is it for today. What is your one more question. What in your opinion is better, fundamental analysis or technical? Well, definitely you need to know them both. So why is that? Because for long-term investments, for example, my Ethereum, my Bitcoin trades, fundamental analysis was very important, because even though I knew, I didn't know exactly, no one knows the future, but everything looked as if they were, for example, yes, we have this upwards trend. This is quite an obvious one here, but we never know its potential, how far can it go. But the fundamental analysis, using fundamental analysis, it might give you an answer how much further we can go. So can we go to 70,000, etc. So as I say, technical analysis is good when defining your entry points, and fundamental analysis is great because it tells you how much of a potential a certain trade has. And also it teaches you not to trade during the news releases. It teaches you how to actually interpret news, and how to select stocks if you want to invest, if you also want to become a long-term investor. So in my opinion, it is crucial to know them both. But just maybe one final thought here is that when you trade FTT, you don't really need to know so much about fundamental analysis. So if your goal currently is to aggressively grow your capital by trading FTT trades, or FTT mode of trading, then in this case you don't need to know so well about fundamental analysis. You can just simply learn and master, become a ninja of technical analysis, and that will take you far. So that would be my answer. And but at the same time, I think it's not really that, it doesn't really encompass too much information. Like fundamental analysis, maybe you need 2-3 weeks to sort of watch enough webinars and learn a lot about it. So technical analysis is more, I would say, more difficult, and you just need more time. It is just more time consuming, I think. But overall, I think, so yeah, they both need your, they both deserve your attention. And I would say pretty much almost all successful traders, they are good both with technical analysis and fundamental analysis. And just very rarely, I would see some traders who know almost nothing about fundamental analysis, or others who don't know much about technical analysis. Like usually you know them both. All right, my dear friends, fellow traders, that is it for today. I would like to thank you so much for your attention, and good luck with your trades, and I will see you next week. And don't forget to watch our trading sessions on our other channels, because we have a lot of trading news and a lot of, as you demand, live trading. So wishing you a wonderful trading week, and I will see you soon. Thomas signing out. Bye bye.